Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. Coming to stock market on Friday, we could see the market continuing to fall. In fact, if you look at last 3 months, that is December, January, and Feb. Of course, Feb is ending, but then if you look at last 3 months, definitely Indian stock markets have been continuously falling. Yes, so markets have fallen in the last 3 months, and the fall doesn't seem to kind of stop at all. In fact, for the entire week, if you see last week also, on every day the market has fallen. So things are not looking good right now. But then, what is the concern? That's something that we need to understand. So if you look at the last Friday also, we could see the institutionals selling was actually net very small because the FIIs did sell for almost 1,470 crores, but then the DIIs have bought for 1,400 crores. So that means the net selling was just about 70 crores. For 70 crores, does the market have to fall so much? Definitely not. So if you see the last entire week, the trend that I have seen probably is that the institutional selling is not that big. Net selling, I would say. So is not that big to be talking about for the market to be falling so much. So then if the institutions are not selling, who is selling? Probably the retailers. So in fact, there was also a news report that said that more than 38 lakh investors have kind of moved out of the market. So what is happening right now? So if you look at the last 1 year, I would say the market has been very, very volatile. And next important thing, it has given kind of negative returns. So if you look at all those new people who have come into the investment space in the corona season, I would say are those people probably who are going out because they don't have proper guidance on what they should do. And if you see a person who was a part of the first corona bull run, there it was so simple that you buy any stock and you make money out of it because any stock you buy was just going up and up. So it was kind of a time where anybody in the market could actually make money. But those people who have done it without any knowledge and education would be the people who kind of made that money during the time and lost that money in the last 1 year. So that could be one important aspect to be watched because if that is the case, a lot of retailers might move out of the equity space. But then is that the right thing to do? Definitely not. In fact, like I always say, these are the times where we need to continuously invest in the market. But then unfortunately, a lot of people who have actually come into the market during this last 2-3 years are people who don't have any guidance or knowledge about it. And one way I would say it's a good thing because they have kind of are out of the market by not losing more money, whatever they had as kind of lost. That could be one reason. So this is just my analysis I'm telling you. So though now the only thing that I need to look at is the mutual fund data also supporting this? Yes. So, in the next couple of weeks, we'll also see the mutual fund data coming in from the AMFI, and that is something that needs to be watched. Is the SIP amount continuing to stay same, or is it growing, or is it going down? Probably, I have a feeling probably it can go down because, in fact, even I got an investor call who asked me, the markets are looking bad, so shall I stop investing into SIP? So this is completely wrong. If you're investing into SIP, you have to continue to stay invested during this kind of period because only those people who have seen the negative on the portfolio are the people who will make money in the further run. Why? Because we are buying at lower prices. So if we continue to buy when the markets are down, that is when we are buying better stocks or better units of mutual funds at a lower price. And when the market again starts recovering, that is when we can see these units or stocks to start giving us really good profit. I am telling you, I've been in the stock market for quite some time, and with my experience, I'm telling you this is the time you need to be staying invested, and not only staying invested, but also continue to invest on a SIP mode because nobody knows where is the end of the fall. Now, the question, if you see on this, the first screen, I had actually shared where is the end of the fall. Do you know that? No. Do I know that? Definitely no. Now, does anybody know that in the world? Nobody knows. Because that's exactly why I say the stock market can never be predicted but just anticipated. Now, how do we anticipate? So, we've got some important levels that we watch, and if those levels are broken, then we are kind of bullish or bearish based on that. So for now, I would say as of now, 17,350 to 17,400 is a very important support zone. So any drop below 17,350, I would say not a intraday drop, but a closing basis. So on the net closing basis, if the market is closing below 17,350, that could be leading to more bearishness towards 17,000. So that's something important to be watching for this week. However, I don't see that happening unless Adani stocks continue to fall the way they are falling the last few days. So things have not been really good at Adani. In fact, just about 35, 40 days back, the net worth of Gautam Adani, was about $135 billion. And today, it is just close to $35 billion. That is a clean wipeout of $100 billion from a personal wealth. Imagine, from world number 2 or 3 versus Pushin and richest man, and from there he has come down to nowhere. So what is happening? So first thing that I need to tell you here about the Hindenburg report and Adani fiasco, nothing has been proven yet. But as long as things are not proven, things are uncertain in case of Adani. And one thing about stock market I'll tell you is the stock market doesn't like uncertainty. So that's exactly why Adani stocks are being beaten up like anything. So until something really concrete comes up and tells that this is the problem, or this is right, this is wrong, whatever it is, if once it comes, the market will start stabilizing. Now, will that happen today? Will that happen tomorrow? Will that happen this week? Is something that we never know. So these are things that we need to understand and stay with the market. So right now, I would say this is the time that you need to be married to the market, not diverse the market. So because this is what is actually the time that would actually give us great benefits over the future. Now, even next important thing that we need to look at is the markets have been so much oversold. There are so much chances that a lot of people are sitting to buy at a lower level. Now, once there is a short covering, that is with so much market being oversold, if somebody tries to start booking profit, or if somebody starts buying some institutional, there are chances a lot of support can come in, then market can recover big. So that also can be on the card for this week. If at all that happens, don't be surprised if you see a big green candle in one of these days. So that is also that could be watched. So why I'm telling you this is, if you're a short seller, be careful about your shorts, because in an oversold zone, it is not, or I would say it is dangerous to hold a short position. So that's something very important to understand. So as of now, I would say the markets are kind of, have continuously fallen last week. So I'm kind of personally expecting the market not to fall much further unless there's a really bad news coming in from Adani side. But otherwise, things are kind of looking good for India. Otherwise, if you look at the important data that's coming up for this week, tomorrow we have the India GDP number coming, which I think would be a non-event, because of course we are expecting a nominal growth. So that's completely okay is what I feel. So no major news for this week as well. I would say the only focus would be on the stocks that we see movement, stock specific movement. So right now what is happening? The banks are also suffering because of Adani. So if you know, on Friday there was this detail that came in that bank deposits have grown and loan has grown. That is a good sign for banks. So that means banks should do well. But the only reason why banks are not doing well is due to their exposure to Adani. And as long as Adani doesn't stabilize, the banks will continue to be in pressure. So that's something to be watched. So right now, if you see, there is of course a lot of pressure on SBI, Bank of Baroda, of course the PSU banks, which have kind of lent enough money to Adani Group. So they are under huge pressure. But apart from that, I still don't really understand HDFC. They don't have any exposure to Adani, but still HDFC, when banks are kind of beaten, they are beating every bank in the market, the retailers, I would say. Or, what's happening right now, because all the banks, Axis Bank, ICICI Bank, everyone is going down. But then these are all good stocks is what I believe, and that's exactly why I'm going to take positions. I am taking positions, I am holding positions in these stocks, and I would only build up as markets kind of go down. So that is my strategy. This is what I just wanted to share, because this is what I've learned from my experience, that if the market goes down, I only buy and not sell. So these are things which are to be watched in the market right now. So any recovery in Adani Group can actually trigger some support in the Indian market. Right now, the major problem seems to be the retailers in Indian market. And, it's a common thing that whenever there's a bull market, there are a lot of retailers who get into the market. And when the bull market ends, kind of a lot of retailers who lose money and get out of the market. But the problem is these percentage of people who get out of the market are the people who bring bad name to the stock market, because majority of them don't come to the market with knowledge, but they just go bet in the stock market. Yes, because majority of them don't know which stock to buy and why. So unless you know why you have to buy a stock, then you really are betting on a stock. And that's exactly what is called gambling. So we believe in a research, education, knowledge, and then decide to buy a stock or trade in the market, and that will keep the market kind of safe. But of course, one thing important is the volatility is set to continue as long as the retailer power is there. But markets will take some time to stabilize, and if it stabilizes, is when we should see the market kind of recovering. So let us look forward to a week without much action. I hope the week actually remains without much action, because like I always say, we can never predict the market, but just anticipate. So I am anticipating that the market kind of stay range bound for this week. And because they've fallen enough, I don't see another reason why they should fall further, unless there is some of this bad news. So that's it. This is the view for the week. Let's see how the week goes, and looking forward to a great week ahead. So with that, this is Srikanth Rajan signing off. But before we leave, a quick reminder on the levels. On the lower side, 17,350 is the important support. If that is broken on the closing basis, then I would kind of turn more bearish on the market. So on the higher side, we don't really have to talk about 17,500, 17,600, 17,800, all the resistance, but only if it really turns up. So let's see how the market behaves for this week. Looking forward to a great week. Goodbye. Have a great day. This is Srikanth. I'm signing off. Again, before we leave, do remember to press the like button if you love the content that we share, and do consider subscribing to the channel so that you get notified with the latest content that we share. Have a great day.